Thank you guys for coming in today. We appreciate you doing that. Thank you for joining this session today in our webinar series at Cashflow Champs. It is our intention to bring you good content on a weekly basis as usual, and just to develop good relationships with you, and also to just be a resource for you in the multifamily space. And today what we'll be covering is multifamily syndication made simple. So in today's webinar, we'll be covering what is multifamily syndication, there's the different benefits of multifamily syndication, classification of investors that invest in multifamily syndication, active and passive investors, making it simple for them, and anything more that you guys want to discuss. So as we go through here, just feel free to put any questions or comments in the chat as we go through. We can make it interactive, and we should be finished up right about in half an hour or so, about 11:30, 11:33, right about there, right? So just by way of introduction, take a second to do that. I am Paul Sr. For those who don't know me. I am one of the managing partners at Cashflow Champs, and privileged to work with 5 other guys who make up the Cashflow Champs team. I am married. I live in Washington, D.C., well, in Prince George's County, right outside Washington, D.C. Been here for almost 30 years now with my wife and children. And to get some more information on our company, you can go to cashflowchamps.com. and you can get some more information there. I'm also the co-host of the Real Estate Podcast, the Cashflow Champs Real Estate Podcast, with my partner, Prashant Kumar. We do those on Fridays, and we release those for you guys to also, learn more about us, and also to, get some more information about investing there as well. Right now, we have a team portfolio, a little bit over $146 million, about over 1,600 units. Asset under management right now, and we have right now 3 deals on the contract that we have to go to closing. We're just awarded a new deal yesterday, but we are looking forward to closing 236 unit in the Atlanta MSA, and that's a beautiful asset, good returns on that 506C. So just about 3 or 4 slots that's left there. So if you guys are interested, please let us know, and we can get you into that one. In terms of resources, we do have some resource for you. And we have the underwriting session on Saturdays that we do with one of our managing partners, Charles Seaman. So feel free to take advantage of that, underwrite deals, dissect T12 rent roll, use the syndicated deal analyzer. So if you want to learn to underwrite, it's a great resource for you to do that. We provide that to you guys for free. You can ask as many questions there as you want in underwriting, and great learning environment, really. And then we also have the Aristocrat Coaching Program, which, we have students in the program right now who are actually participating in some of the deals that we're doing right now. So one of our guarantee is that if you join the Cashflow Champs Aristocrat Coaching Program, you will close the deal, right? There's theories out there. A lot of coaching program is theoretical. There's nothing wrong with that. You need a theoretical foundation to get started. But once you want to get practical going, Cashflow Champs Aristocrat Coaching Program is a great resource for that. We also have a virtual summit that we started last year. Our virtual summit, annual virtual summit, is coming up in November 17, 18 to 19. We would like for you guys to go to cfcsummit.com and sign up there, and tell a family, tell a friend, so that we can get good attendance again this year. Last year was a very good turnout. We had well over 1,300 registrants last year. Again, if you have any questions as you go through, feel free to put them in the chat. I'm here to entertain and do those for you. Let me make this disclaimer as being required by our attorney. I myself, I'm not a real estate attorney. I'm not a financial advisor, tax advisor, or accountant. The purpose of this webinar really is just for information purposes only. So you want to seek the advice of the appropriate personnel if you need any of those services. So let's just jump in today. It's going to be a fun topic today. We're talking about multifamily syndication made simple, and simple is not easy. There's difference, but it's made simple. So what is multifamily syndication? We can actually start there, right? So, really it's just a pooling of resources, right? So multifamily syndication is an alliance in which multiple individuals pool together their equity, their resources, their experience to purchase a multifamily asset. So the reason for doing a multifamily syndication is typically to execute a business plan to increase the valuation of the asset either through forced appreciation or just organic rent growth, right? So traditionally, multifamily syndication have two parties involved in it. You will have the multifamily syndicator, or what we call the operator, and the passive investors or the limited partners, often abbreviated LP. So a multifamily syndicator may also be referred to as a deal sponsor or a general partner. They're all the same thing. So all those are synonymous, whether you've been referred to as a syndicator, a deal sponsor, a general partner, or an operator. So the syndicator responsibility really is finding the multifamily opportunity and allow the LP to partake in it. So the syndicator will find the opportunity, they will underwrite the deal, they'll submit the LOIs, they'll secure the PSAs, the purchase and sales agreement, they'll do the sourcing of the equity, in other words, you got to raise the capital for the deal. The sponsorship team does that. They'll conduct the due diligence, they will arrange for the financing, and they'll work the transaction process, right, all the way through to closing. So really the GP or the operators, they're doing the legwork, and really they're earning their sweat equity in the deal that way. We work also with property managers, and the operators would work with the syndication attorneys. They work with the brokers. You have to build those brokerage relationships as well so you can get the deal in the first place. But you also have to have your syndication attorney, your transaction attorney, and also have asset management and things like that lined up. So that's the responsibility of the operator on that side, to make sure that everything is secure so that the deal runs fluidly, so that the business plan can be executed, so we can give the projections that were mentioned up front. So once the multifamily complex has been acquired, the sponsorship team is responsible for operating the asset really until sale. Now, in terms of the passive investors, their primary role is to bring equity to the deal so that the deal can be closed, right? So based on the size of the deal, the equity required to close the deal can run into millions of dollars. So there's often a minimum requirement that most sponsor team will stipulate, and some of them will say $50,000 is a minimum, right? But this can vary widely. You can have sponsorship team whose minimum is $100,000. You can have those who are $250,000. We have a deal that we put out there, and our minimum requirement for that deal was $100,000, right? So it allows you to give opportunities to individual to come in with a nominal amount of money, but can still be part of a bigger operation in terms of taking down a multifamily property, which is millions of dollars in terms of transaction. So the passive investors sometimes have the option to invest in different classes as well, right, of the same asset. So again, even the same property we're talking about, we offer different asset class. So you can structure your deal that way, where, for example, you can have an A, B, and C class within that asset. So if for folks investing say $500,000 or better, they could have a share in the property, and then they get compensation accordingly. So they may get a higher preferred return. And for folks who are investing like $100,000, say between 100 and say 250, they may get a different portion in terms of what the preferred return is, typically about 7%. So once the multifamily complex is acquired, the passive investor, in most cases, will just collect an income pretty much on a monthly basis or a quarterly basis, just based on how distribution is made. And then they also get to partake on the upside of the deal, meaning that when the deal sells, then they also get to share in that promote as well. So many types of real estate investment can be syndicated. Multifamily real estate is just one of those type of real estate that can be syndicated. But you can do office, you can do industrial, you can do a variety of different asset class in terms of a syndication model. So the syndication model is not necessarily unique to the multifamily real estate space, right? But when you talk about multifamily, really, a multifamily unit is anything that was 2 units or better, right? So 2 units all the way up to over 1,000 units, those are multifamily units. But typically, when you talk about properties that are maybe, I guess, 50 units or better, or 100 units or better, people more use a jargon, which is apartments, right? So you'll find out that the economies of scale doesn't really allow for syndication too much say below 50 units, right? So below 50 units, well, above 50 units, you have people more like employing the syndication model because it works better that way. Below 50 units, you probably have people, occasionally do it through the syndication model, but more so do it through the joint venture approach, right? Because with the joint venture approach, then you're able to save on certain type of fees that the syndication model would otherwise charge. For example, your acquisition fee, maybe a disposition fee, those type of fee you would not account for those used in the joint venture model. So, you just got to bear in mind what size deal you're dealing with, what size property you're dealing with to employ the syndication model or not. Again, if you have questions as we go through, put them in the chat. This is a very light one today, talking about multifamily syndication made simple. We're going to touch on some of the benefits of the multifamily syndication. Of course, the first one that pops up would be your tax benefit, right? So multifamily real estate has great tax advantages. Most investors use a mortgage to finance a property. They can then take the deduction for the mortgage interest that's being paid during that fiscal year, right? So the mortgage interests tend to be higher in the first years of ownership just because the loan just started to be amortized, right? So you'll get greater advantages in the first year in terms of your deductions. But multifamily properties can also be depreciated over 27 and a half years. So it's beautiful in that, you can have the depreciation over that period, even if the property technically is appreciating in value. So most properties will appreciate in value, but at the same time, you're getting the depreciation of the asset as well. So you're getting both sides of it. So depreciation can be used to offset a significant portion of the rental income that you collect each and every year, right? So for multifamily, you can use really 3 different types of depreciation. And you can start out with your standard depreciation. This is a depreciation pretty much on different all asset class, right? We'll pretty much have a standard depreciation. But with real estate multifamily syndication, you can also do accelerated depreciation. So typically, we can depreciate the asset over 27 and a half years, but with accelerated depreciation, you can really do what's called a cost segregation, wherein you bring a third-party company to come in and do a cost seg on the property. They can do everything within the property itself. And that company will come in and pretty much piecemeal the different components of the building, and it'll allow you to take depreciation more quickly, right? Sometimes within 5 to 10 years, you can have depreciation on some of the items within there. So it accelerates the depreciation for the investors. And then the third one would be the bonus depreciation, right? It allows for the business to write off a large percentage of the renovation expenses that you're putting into the building in the first year. So a lot of multifamily real estate has to do with what we call value add. And so you get into these properties, sometimes they are dilapidated, sometimes they just need work, sometimes they're still habitable, but you want to get in there and spruce it up so that you can get the rent premium that you're looking for, right? So oftentimes operators like ourselves are putting lots of money into the properties up front, and that's where you have your bonus depreciation being advantageous for you in case you have to do that expenditure up front. So that's part of the beauty of real estate investing, is that you can have a property that's bringing you income throughout the year. At the same time, you can possibly show a loss on your tax, a loss based on the tax benefits that this asset class allow you to have. So as it goes without saying that, it's part of the reason why multifamily investing is highly attractive, right, to many investors. So we're talking about the benefits of multifamily syndication. Another one is obviously cash flow, right? So we have the tax benefits, we have cash flow. One of the reasons investors like multifamily property is for the cash flow it generates each month. So your rent is typically predictable, especially in strong markets. And even if you have a unit turn in those markets, then if it's a strong market, then the lease up is pretty much insured, right? So you year after year, you have steady cash flow coming in. It's important that you get into properties that are cash flowing if you are a cash flow investor. not everybody is necessarily a cash flow investor, but some people are, right? Some people, want to go in there and do the heavy lift of properties that are pretty much unoccupied. They do the renovations and then they sell it just primarily for the appreciation. There's nothing wrong with that. But if you're a cash flow investor, you want to make sure you check out the underwriting of whatever operators that you're working with, and to make sure that your cash and cash return meet your requirement that you have for yourself from year one. If it meet year one requirement, then pretty much it should be good going forward, because you're expecting rent to increase over the years. But make sure at least year one is looking good. At the very least, just make sure you're averaging, at least 6%, at least 6 or 7% for your cash and cash return on the underwriting. If you're looking at an operator who does not want to share their underwriting with you, that may be a red flag, at least a yellow flag, right? So that should be an open book, because it's just, an Excel sheet that they use to do their evaluation of the asset. And if you're going to invest in that asset, then of course, you should have the right to take a look at it. So ask for it. And, if you don't get it, consider twice, but it should be readily given to you. Passive income is also another great benefit of investing in these multifamily syndication deals. So investing in multifamily syndication real estate is just a great way to generate additional income without lifting a finger, right? It is easy to hire a property manager who will take care of the day-to-day responsibilities for you. This is particularly attractive for those people who have, just small amount of experience in terms of managing a property or even owning an asset like that before. So you really don't have to deal with the tenants, the termites, and the toilets in order to make money passively through multifamily real estate. And one of the way to do that properly is to make sure you know how to vet your operators, and we can touch on that just a little bit more. Another great benefit is just the lower risk with multifamily. Multifamily properties is considered to be relatively a low risk or safe investment compared to other real estate asset class. And this is because even during economic downturn, people need somewhere to live. So right now it looks like we're getting ready to go into another economic downturn. I don't know if it's going to be bad as 2008. I lived through 2008, invested through 2008. And really in those type of recession, many people find themselves forced to sell their homes and to move into rental housing. So instead, it can really take a while for people to really rebuild their credit and things like that. So it takes a while for them to get back on their feet. And because of that, it prolonged the demand for multifamily property, for rental property, right? It can be an unfortunate and sad situation for many individuals, of course, when there's an economic downturn and people lose their jobs and everything like that, which is very unfortunate. But at least housing operators like ourselves are there to provide them a place where they can live. So from an investment standpoint, it kind of lower the risk, because even in economic downturn, your asset will still be performing very well, probably even better than it normally would in thriving times. And this cannot be said of like office spaces, and things like that. I mean, you can see that this past downturn here, a lot of office spaces and retail spaces, went in big trouble. I can't say really belly up, but certainly, I mean, there are many cities across our nation where the office spaces percentage were really down, really low. And for that reason, I mean, even some multifamily operators and hotels as well, some multifamily operators went into those space like hotel, especially that has a layout that can, be converted into multifamily. They went ahead and did that because there was a high demand still for multifamily, even during an economic downturn. So that's one of the beautiful things about the multifamily space. That's definitely one of the benefits. So in terms of classification of investors, we'll touch on that a little bit. We're talking here about multifamily syndication made simple. These are simple things that we need to know, especially if we're going to operate in the multifamily space, or even if we're going to be a passive investor. We think an educated investor is the best investor. So you really want to know the different things that goes on in this space. So there are different classification of investors as it pertains to investing in a multifamily syndication deal. We have what we call the accredited investor. So along with the accredited investor, we have the non-accredited investor. And we also have the sophisticated investor as well. So by definition, really SEC definition, an accredited investor is an individual that has a net worth of at least $1 million, excluding their primary residence, or if they have income for the individual of $200,000 or more, and for if the person has a spouse, then it's $300,000 or more in the past 2 years, and they have a reasonable expectation of the same type of income for the current year. So that's really your definition of an accredited investor. It's important for us to know that, because there are some deals that only give offerings to accredited investor, right? And those are typically what's labeled 506C, which is one of the exemption on the Regulation D in the SEC. So, an accredited investor, if you're an accredited investor, you'll get opportunities that sometimes, non-accredited investors do not get. So again, accredited investor, 200K or more per year individually, 300K or more if you have a partner, and you have a reasonable expectation of that continuing, or if you have a net worth of $1 million or more. Now, there are some professional status that are credits that allow you to be classified as an accredited investor. So for individuals who have certain professional designation, they may also qualify as an accredited investor. For example, you may have heard of Series 7 or Series 65. That's through the financial industry regulation. So for those people who are in the financial space there and they can get a Series 7 or Series 65, those guys can be qualified as, or are qualified rather, as accredited investors. So it's just not based on what we said previously, but you can get it through some type of credentials as well. Now, your non-accredited investor is easy, right? It's just the very opposite of what an accredited investor is. So a non-accredited investor is any investor who does not meet the income requirement or the net worth requirement, stipulated before. So for non-accredited investors, it really means that it would be illegal for someone to present an investment opportunity in a private business to a non-accredited investor, unless that operator know that individual before. So that's what we talk about, pre-existing substantive relationship, right? So that's a different type of a thing there. So we have 506B and 506C. 506B, as in Bravo, allow you to invest with people that you know before. But if you don't know them, then you don't want to present that opportunity to them, without a pre-existing relationship. Now, we also have a sophisticated investor, and the SEC defined a sophisticated investor as an individual or an institution that have sufficient knowledge and experience in financial matters and business, where they're capable of evaluating the merits and the risk of the investment. So when operators are going to make an offering under the Regulation D of the SEC, they have to decide, is it they're going to do a 506B or they're going to do a 506C. So companies that are conducting like an offering under Rule 506B, they can raise an unlimited amount of money, and they can sell their securities to an unlimited number of accredited investor. But for a non-accredited investor, then, or sophisticated investor, they're capped at 35 investors, right? So an offering on the 506B, however, with that offering, you cannot advertise. There's no solicitation. You can't just blast it out on social media. So there are differences between how you handle a 506B offering and how you handle a 506C offering. So these are the two different exemptions, under Regulation D in the SEC that allows folks to invest into these offerings. So general partners, they must have, I mentioned before, have a pre-existing substantive relationship with those folks who are participating in 506B offerings, right? In 506C, however, like I made mention, you allow general solicitation. You can advertise, you can market those securities to those individuals, because it allows for that. You're dealing mostly with accredited investors in the 506C space, and those guys, they know how to evaluate the merit of the investment, and they have met the income requirement and also the net worth requirement. So with 506C, the SEC, it allows like high yield unregistered securities to be offered to these investors, right? The 506C, right? Many accredited investors, they invest their money in alternative investment, such as real estate and these private equity groups. And they do that because they meet those requirements. And again, these investments are kind of set aside for these individuals. So what really is the difference between, what is one of the big difference between the 506B and the 506C? Well, the 506B offering, the operator or the issuer, they may take the investor's word that he or she is accredited, right? Unless there's some reason for them to doubt them that they're lying. But in 506C, it is incumbent upon the operator like ourselves to make sure that the issuer take reasonable steps to verify that the investor is accredited. So accreditation status must be verified in the 506C. So you have different companies out there that will do that for you, right? So there's a variety of them. We have a 506C offering right now, and we have a company that verify the accreditation status of our investors, or they can probably go to their CPA and also get it verified that way as well. It is unique, I think, starting last year, where you can start out an offering as a 506B, as in Bravo, and then you convert it to a 506C offering, as in Charlie. We're doing that actually right now in the one that we're closing in 2 weeks, right? So we started out where we could entertain those individuals who are families and friends who have substantive relationship with, pre-existing relationship with, and give them an opportunity to invest into the deal. And then we just open it up to the general public where we convert from a 506B to a 506C. There's a definite cutoff date. You cannot go back. And so once it turns into a 506C, then individuals, we can blast it out, on the internet, to social media, general marketing campaign, where we can get more investors in there to kind of complete the race. So that's a possibility, and a lot of folks are taking advantage of that. All right, so let's then touch on active and passive made simple, really. An individual can be a part of the syndication. They can become a limited partner, or they can become a general partner. And it's quite simple to do that, right? I mean, just being a limited partner, there are many advantages of becoming a limited partner. Because one, you can enjoy the cash flow we made mention of. It produces income, is an income stream that's coming in. And the LP can invest their capital, and they can get solid return without really any hassle in terms of the day-to-day operation of the assets. So you can get in there and enjoy being a limited partner in some of these deals, and it's a very simple thing to do, right? But one thing you want to make sure you do well is that you want to select your deal sponsor or your operator well, right? So if it is that you want to enjoy the benefits of it, then do your due diligence on this deal sponsor, right? You really want to look for someone who has a good track record, right? And someone who's experienced, someone who has good reporting systems, and someone who can be held accountable, right? Someone you can actually reach them in case you have a question, right? So I tell you, the LP side sometimes is a beautiful side to be on, right? Let's see my internet. Hopefully you guys are hearing me okay. Said my internet was unstable for a second. The LP side is sometimes a beautiful side to be on, right? Because I mean, you can vet your sponsors, you can have your money, you can place your money in a deal. That deal can work for you, and then you are also in on the upside as well. You have to also know the structure of the deal that you get in, right? I mean, deals are structured differently, and based on how the deals are structured, then it dictates the amount of returns that you get, right? One good thing for a deal is definitely preferred return on the deal, right? So we offer our deals with preferred return right now. We think it's a good thing because it gives priority to the investor that they will get a first piece of cash flow that comes off the deal. So make sure when you're doing your due diligence on the sponsor, you also, find out how they normally structure their deal, or how is that they'll structure the deal that you're going to get into, more importantly, right? So you can enjoy that simplicity of investing, but certainly you want to do some due diligence on that as well. Co-invest, right? We think that the best sponsors are those who, have investment at heart in the very first place. I mean, most of us, if not all of us on our team, have invested first in other people's deal, right? So we want to make sure that the investments we're offering, is also good investment for individuals, so they can come in and enjoy it, right? So we invest too alongside our investors. We think co-invest is the greatest alignment of interest, and so that it's good for you to have sponsors who will co-invest with you passively, as well as they operate the business actively, right? So that's probably one of the things that you can check out when you are actually, vetting your sponsors. You're trying to get, your business going in terms of syndication. So it's good to consider sponsors who invest alongside your passive investors. That's pretty much the point of that. You also want to have sponsors who have good business acumen, right? You really want to have somebody who is able to really at least read a spreadsheet, right? Because typically, we as operators, we don't necessarily get out there and get our hands dirty necessarily on the property in a day-to-day operation. The way it's set up is that, you have your property manager that oversees those guys who are actually at the property, like your leasing agent and your tech. So you have folks that are there that are being overseen by your property management, and then you as the operator is in touch with property management company, pretty much from an asset management standpoint, where you get the spreadsheets and you get the reports and you get everything that come in maybe on a monthly basis, at least on a monthly basis. So you have to have some type of business acumen where you can kind of go through those paper just to make sure that it kind of meet what you're looking for. It is following the business plan as projected, and that things are going along in the right direction, right? Now, that's a beautiful side to be on, where you can operate, where you can go in as a LP. In that way, you can vet your sponsor. You can, know what you're looking for and identify that and invest in that sponsorship group as well. But you can also be an operator, right? I say it's simple to be an operator. So multifamily syndication made simple. It's simple to be that, but it's not easy, right? So the best and simplest way to be an operator is really to align with someone who's already doing a good job of it, right? So try to get contact with a good syndication team. You can get in there, really just offer your services, right? I mean, you may already have a job right now and may have to do it part-time for a while. That's okay. You can get going in that direction. And if it is that you want to come over full-time in terms of the multifamily syndication, as terms of operating, feel free to do that as well. It's good to probably have some reserve before you do that, but definitely it's a space that you can grow in. It's a space that can be lucrative, but you want to make sure that you join a good team, or if you're going to start a team, you know who you're looking for, who can be partners with you to make that, to get that going, right? So you can start out volunteering your time, because here you can get key concept about the operation of a multifamily syndication company. There's a lot that goes on. When we get a property under contract like we did, yesterday, I mean, the ball started rolling today. We just met an hour ago with this is an assumption loan that we're doing, right? And we met with the lender as for a kickoff meeting, and they're just a checklist that's coming at you right away. And so you have to be prepared to do that type of a thing. So is it hard to do? Not necessarily hard to do. It's not tedious to do, but certainly it is time consuming, and you have to be diligent in terms of getting back to them the things that they require, right? So it is easy in that sense, but you have to make sure that you're diligent in terms of getting that performed. So you can work on either side of the table. You can go as a LP, or you can go as a GP. Like many of us do, we operate both sides. I mean, we invest in the deals, we invest in other operators' deals as well, and we also run the operation. So definitely, it can work either way, just a matter of choice for you. And, the multifamily syndication in that sense can be easy. I'm going to take a look to see if there's any questions or any comments in the chat. We're running up against time here, which is okay. And thank you guys for attending today. We really appreciate you attending and supporting these sessions with Cash Flow Champs. Please continue to spread the word. We want to get this information out to individuals. And if we can be of any help to you in the real estate space, feel free to do that. We have many resources out there. We made mention of those before. And we appreciate you hopping on here today. And next week, we have a great topic coming up. Prashant will be doing that topic next week. So feel free to come back next week and also bring a friend as we try to get you the information and to grow this audience. Thank you so much. Have a great day.